Welcome to Markets Now. I'm Michelle Rook along with Tom Fitzenmeyer with Summit Commodity Brokerage. We are seeing a mostly higher start, at least this morning, in the grain trade, with the exception of the corn market. As far as the livestock futures, cattle seeing a little bit of setback, but we're trying to recover here in the hogs. And Tom, let's talk first of all about the grain trade. We've seen some back and forth action, some choppy action, a lot of it positioning ahead of reports here on Wednesday, you think, by USDA?
Yeah, there's no doubt that that's a big part of it in the early part of the week here. We're also reacting to Argentine weather forecasts. It's dry, then it's not dry, and then they get a little rain, and then there's a forecast for dry again. So there's a lot of uncertainty over exactly what's going on there. I mean, a lot of the crop was planted pretty late, so if it does start to rain, they got a chance to salvage some pretty good yields on the last 60% or so of the crop that was planted. Anyway, that's what's going on. You've got the negativity in the crude oil isn't helping all that much. Cattle numbers are down, so demand's probably going to be lower. There's some shifting of corn to wheat, so there's negatives on one side and positives on the other, and that's what's keeping corn in the 660 to 685 range, basically on the March contract.
Yeah, we're going to need some catalyst to get us over that mark, because actually that 685 area around there in corn, we've hit our head against that resistance level on the chart several times now, haven't we?
Yeah, we have. And technically we've rolled over the trend, and momentum indicators are pointing lower. So it's going to need some friendly numbers out of the USDA tomorrow, and I don't know. They're probably going to end up lowering their export number a little bit. Don't expect them to change the ethanol demand all that much. Don't expect too much change in the feed usage numbers. So, and if you look at the average trade guesses, they're only looking for an increase in the carry out of 20 million bushels. So nobody's expecting a lot of change. Probably the bigger feature is going to be how much of a downward adjustment they make in the Argentine crop estimate. Most people think it's going to be 2 to 3 million metric ton, actually in both corn and beans for Argentina, and only a slight bump in the Brazilian crop to offset that.
Yeah, and I think the private estimates for Argentina are already below where USDA is going to come in at for both corn and soybeans. And speaking of Argentina, of course, that Argentinian crop is what's been kind of driving this soybean meal market. We went up into new contract highs again yesterday in soybean meal, and then kind of set back. And soybeans kind of got up into resistance up there at the January high. So what would it take to get us back over those marks, do you think?
Well, a lot of this has been driven by the meal market. I don't know what everybody runs around here like Argentina's. They're a processing country. They export most of their soybeans as meal and oil, primarily meal. So that's primarily what's got the meal market all excited. Well, I mean, the reality is that hasn't translated to any significant increase to our meal exports. So you wonder about that. The
Yeah.
other thing is that they're starting to import some Brazilian beans through their ports, which they can process and sell as meal. They're also starting to bring a few beans in down on their inland uh, routes. So it's not like it's that hard to get soybeans into Argentina to process them and sell the meal. So I'm not sure what's going to. And then, like I just said earlier, cattle numbers are down.
Mm-hmm.
Um, I don't know. We're producing plenty of DDGs, so you've got that alternative if meal gets a little high. So I don't know what sustains meal above $500. I personally think you should be selling the daylights out of it, but I guess we'll see here.
Yeah, definitely. We saw some profit taking yesterday, and that's carrying over here today. And as I mentioned, soybeans have not been able to take out the January high. And with this big Brazilian crop coming that you talk about, that is going to be pretty hard to get back above that level as a result, don't you think?
Oh, I think absolutely it will. And I know there's a lot of people that are really bullish beans, and I think there's some expectation with China open back up and their COVID situation maybe improving, that's going to generate a bunch of soybean sales for us. but I don't know why it would. I mean, the Brazilian beans are offered at almost, well, when you take transportation advantage into consideration, they're almost $1 cheaper than we are. Why in the world would
Yeah.
anybody buy U.S. soybeans?
Yeah. Plus now add the China trade tensions on top of that, and that may be putting a little bit of a wet blanket on that market as well. So what do you think about the wheat
Well, we can't
market here,
forget,
Tom?
we can't forget the balloon
Yeah, I was
and
gonna
the
say
importance of
we've
the
got these
balloon.
China trade tensions, which have ramped up here, and I know that was a problem for soybeans, meal, and maybe even the hog market yesterday. And we'll talk about that in a moment with the hogs. The wheat market, what do you think there? We've seen some spread trade going on, but is in terms of that market, do you think that we don't have much weather premium in, we don't have much war premium in there, but is there anything else that could push the market higher? Because exports are a little bit better, but really that's still nothing to write home about.
I think they're going to be. I mean, they certainly have stabilized, and we may chop sideways, but going higher is going to be pretty difficult. It may depend a little bit on what the weather's like for the wheat growing areas going into the spring, but I don't see in a forecast there that's all that threatening. So I don't know. It's kind of hard to get excited about the wheat market, especially after it rallies a little bit.
Yeah, the only good thing we can say is that it's kind of held support where it needs to, and that's sad when that's the only thing you can say about the wheat market at this point.
Right, right.
So let's move over to cattle. New contract highs yesterday. We're seeing a little consolidation today, but man, we had a higher cash trade last week. And are we expecting cash will be higher again this week and pull that board back higher with it?
I think steady to higher is the expectation on that cattle market. I mean, uh, we've been talking about it for months now that this drop in numbers is bound to eventually be supportive of the cattle market, and we're finally starting to see that come to fruition. Now, there's always been some apprehension about demand and the effect demand was going to have. As the economy slowing and people's budgets get tight, will that hurt beef demand? And it still may a little bit, but I think that's going to be overwhelmed by the decline in numbers and cattle on feed, and I think that's ultimately going to keep us well supported. Now, we went up to contract highs, a little consolidation, profit taking, a pullback could happen at any moment, but I think over time you're going to continue to see things at least be well supported and probably make new highs again.
Yeah, no doubt. And the funds are long, but they seem to be buying on the brakes. So that's going to be key. And I'm with you. We have all this economic talk about how the recession is going to hurt demand and whatnot. And, we're going to see more interest rate hikes here, especially with last Friday's jobs report. But really, I don't know if demand has slowed down that much and supply should offset it, I would think.
Now, maybe there's some people eating at home rather than eating at a restaurant, or I mean, there
True.
might be some shifts in the way people
Yeah.
consume beef, but I don't see it falling off all that much.
You bet. So we talked about the hog market getting just pummeled yesterday by this China trade tensions and the spy balloon that got shut down. And, do you think hogs are going to be able to recover much today, Tom? Because we did do some technical damage actually to the charts yesterday.
Yeah, it looks ugly on the charts. There's no doubt about it. You go down and make new lows by a pretty substantial margin there yesterday. I guess I still think you're going to see fairly good support in that $80 area on April hogs. When you see beef making new highs, it certainly makes the consumer turn around and look at pork as a pretty good bargain if you're trying to kind of help your budget out a little bit. So I think the demand for pork is going to be quite good. I don't really think the implications of this balloon business are going to last all that long in terms of how much pork China buys or doesn't buy.
Yeah.
So I guess I'm looking for consolidation and support here at $80.
You bet. And it looks like maybe the cash index has started to bottom. So hopefully, with the funds short already, maybe that'll prompt them to cover some of those and give us a little bit of recovery.
Yeah, you make a good point. I guess the question then becomes how much of a recovery can we really have?
Right.
Certainly up in the upper 80s, you'd have to kind of lose your enthusiasm for being long hogs.
Okay. Well, it's good to talk to you. That is Tom Fitzmeyer with Summit Commodity Brokerage, and that's Markets Now.